into your car, you're not worried about crashing it. You're not. You just get in, you drive to wherever you got to go, but you are positioned for your own survival. Should that be the case, should you crash your car, you have some form of car insurance, and you know that if that very unlikely state of the world were to come to fruition, you would be covered. The irony is that we're all in the same car together. That is the US market, the principal direction of risk in US equities. But most people aren't covered. They're not. Your passive wealth manager, he's not covered. He's not covering your portfolio for that state of the world that there's a 20, 40, 60, 80% drawdown. He doesn't know how to attach probabilities and statistics to those crisis events under different regimes. He doesn't know the limitations of those models, parameter and model risk. This is the reality of the situation. It's not about fear mongering and doomsaying. It's about positioning yourself for survival, to have maximum optionality. If you crash your car and you don't have money to fix your car, you're covered. That's why you pay the insurance premium. When the US market crashes again, and this video is going to age particularly well because I guarantee you it's going to happen again so long as expectations get inflated and shattered and there's irresponsible monetary and fiscal policy, there will be another 20, 40, 60, 80% drawdown. You go back 100 years, you look at the Great Depression, the recession in the Depression, the post-World War II adjustment, you look at things like inflation in Vietnam, OPEC, Bretton Woods, dot-com, global financial crisis, COVID, tariff shock in 2025. I don't have to scrape together examples for you of these crises occurring, which is why I am long these events. They are going to happen. In other words, when you get into your physical car, you may never crash it. You're constantly willing to pay an insurance premium for that protection in the state of the world that, you may crash your car, but most people don't look at the US markets that way. And the crazy reality is it's a car that is guaranteed to crash over the next 10, 20, 30, 40 years. And when it does, and you're in that state of the world, you have to ask yourself, do you want to have to sell in a drawdown, 20, 40, 60, 80% drawdown for 80, 60, 40 cents on the dollar if you need money, relative to having optionality or even being able to monetize in those states of the world that will allow you to buy the fire sale? And that is how you can accumulate an exorbitant amount of wealth out of those crisis situations. So having this context and the qualitative interpretation of these crisis events, let's now take a quantitative approach, a practitioner's approach to modeling not only the probabilities of these types of events, but how we can look at positioning for our survival in the long run based on this quantitative information. And we're going to take a look at some pitfalls and some failures of academic work, but we're going to start here with this empirical return distribution. This is SPY ETF daily returns over the last 25 years, a proxy for the S&P 500. If you're targeting a role as a trader, market maker, quant, or you're just looking to grow and protect your portfolio in all market climates by applying quantitative strategy, QuantGuild has two crazy free resources available to you. When you get started, you can pick your track. You can always change this later. If you're looking to break in, head on over to the Quant Roadmap. Every topic in the right order that you need to know for success in different roles. You can select them here. It will tell you the exact breadth and depth of knowledge you need in each for success in interviews and the career as a whole. And of course, if you're looking to grow and preserve your wealth, you're going to want to run your own personal hedge fund. This isn't a day trading strategy. It's structure institutions use every single day to cut their downside risk in half, improving their overall long run return. I have a free quant research note available to you on this page for exactly what is going on. Link in the description below to QuantGuild if you're interested in these free resources.